All right, everyone, let's start this stream by first of all, welcome back to the channel for all of you who've been here since the beginning. I'm the study prep guy, and it's nice to be with you today. For today's class, we'll be looking at some reaction videos on an introduction to economics, principles of accounts, POA. So it's generally nice to be with you back today. So, without further ado, let us get into this immediately. So, guys, just give me a quick second here. So let us go into it right now. So let me open up the top view and just show you the video I'll be reacting to today. If you want what video, I put the link to it down below. Hopefully, I don't get copy. Um, so let's start the reaction. So this is the accounting cycle. This is a video on the accounting cycle, source document ledgers, journal trial balance, income statement, and the balance sheet. We will be looking into the balance sheet, income statement, and stuff around these lines. I'll be creating a video on introduction to economics very soon, so stay in tune for that. So let's start the video.
Accountant cycle. There are two types of transactions: cash
Guys,
transactions,
my foot
credit
just broke.
transactions. Step 1 of the accountant cycle: bills, credit notes, bank statements, emails.
So let's go back to that, right? Let's go back. So it says the terms you'll be looking into today is the bank statements, credit notes, bills, invoices, and receipts. So just a heads up with that.
These are divided into cash transactions, credit transactions of goods for resale, credit transactions not for resale, transactions that do not involve money. Transactions, cash and bank. Goods
Just to give you some note in this, right? I'm going to read full screen. So, like for example, cash and bank. Cash and bank. Another word for bank is check. But they use the term check within economics. Just be sure to know that it also refers to as bank. So check basically equals to bank. It's the same term. So don't get mixed up with that.
for resale on credit. Debtors, customers owe business. Suppliers, returns from debtors, returns to creditors. Items not for resale on credit. Accounts receivable, persons owe business for assets, rent revenue. Accounts payable, business owes persons for assets, expenses, no money involved. Opening books, correcting errors, bad debts and provision for doubtful debts, depreciation and provision for depreciation.
Bad debts we go through and bad debts a lot within businesses today. So your question as a viewer today is what is bad debts? Bad debts are basically those the debts are basically like for example, I'll give you an example. We have Billy. Billy sells shoes. So one day Billy sells a shoe for $100. The person does not pay $100. Instead, they pay $50. Over the course of 5 years, the customer that Billy sold to did not pay that $50. So what happens over time after that 5 years? Billy, who just sold the good 5 years ago, just write it off as bad debts, meaning that they are not paying for that particular good or that particular service. So that is what bad debt basically is.
Step 2 of journals: cash book, petty cash book, sales journal, purchases journal, returns inwards journal, returns outwards journal, general journal. Cash transactions, cash book,
So all cash transactions within business are usually recorded within the cash book. So that is very much important within to remember. So we have the petty cash book and we have the cash book. I didn't know why this point actually included it, but just for add to the things that you were saying just now, the petty cash book is another cash book. Like for example, within a business, we have the cash book, which is for all the major cash transactions within a business. On the radical right, we have the petty cash book that accommodates for those little inconveniences within a business, like small purchases and little purchases. That's where the small purchases or the minority purchases go into, and that is called petty cash book. However, the cash book, which is the overall one, takes in major cash transactions. So we have petty cash book and we have the cash book in itself, and that is where cash transactions are usually allocated to. So I'll pay it back.
Small cash transactions. Petty cash book.
Yeah, petty cash book, you get it right there.
Credit transactions of goods for resale. Sales journal. Purchases journal. Returns outwards journal. Credit transactions of items not for resale. Sales
Right.
journal. Purchases journal. Returns inwards journal. Return.
All right. So when you hear return inwards and return outwards as an economics student, or I don't know, sorry if economics POA student, principal of account student, or somebody doing return inwards is basically like when somebody return a good to your business. Like for example, if you have business by the name uh a clothing business and somebody return clothing back to your business because they're dissatisfied with your product, or generally they just don't like it for some reason and they return it. That's what we call a return inwards. Another return outwards, however, is like for example, if you don't like a good and you're returning it to a business, that is what we consider to be the return outwards journal, and that is the main difference between the return inwards and return outwards. So that is the difference.
Returns outwards journal. Credit transactions of items not for resale. General journal. Transactions that do not involve money.
So
Transactions that
when we use the term the general journal is basically the general journal usually takes in all transactions from the petty cash book, the cash book. Then we have the return inwards, the return outwards books. All these books are usually required within the general journal. So that is what the general journal is used for particularly.
do not involve money. General journal. Step 3 of the accounting cycle. Ledgers. Sales ledger. Purchase
Just a second.
general. Posting to the ledgers means double entry system. T accounts. Left and right. Debits and credits. Increases and decreases. Balancing accounts.
So I'll give you a practical example of this here in a real. Let me see if you could open up this, guys. Please just give me a second. Stay in touch with me. Um, so so I'll show you a real example of how you do post into ledgers, double entry system, for the cash book in particular. So hopefully I could show you that live on screen. See if I get you with this. Can you guys hear me? Everything's okay with you? All right. Please just give me a second. I need to let me open up this thing to show you like something quick. This is important, very important. Let me see, 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 let me see. Can I find it? Can I find it? Can I find it? Give me a second. I want to open this thing so I can do it. so that we guys could see. I just use the entire screen and done with it. Yeah, I get it. I get it. So if everybody could see what they're on the screen right now. So I'll show you how to do the cash book. The cash book, how we do it exactly, because I believe it is important. So I just name this cash book. I'll just name this cash book, guys. So the format of a cash book is, for example, here is the date, and then we enter. We have the details, and then we have the cash, and then we go over here. We have the bank, and then we do it again. Date, details, cash. Then we have bank. So this is the basic format of a cash book. I'll just format the table a bit to make it look a bit more presentable, I guess. So style we put it in this number. So this is the basic format of a cash book. This is usually the CSEC format. But what I'll do, because we need to have a debit, we need to have a credit account. A debit meaning that money coming into the business, and credit meaning that money going out of the business. So give me a second. I'll take all this. Yeah. So we have date. I'll just put it in a cash book. Yeah, that will right there. And then we have debits and have over here credits. No. Okay, guys, we're making progress. We're making progress. Have it here. So this is the basic format of a cash book within a business. We have date, details, cash, bank, date, details, cash, bank. And here is where the account is receiving. Right here is the way the account is receiving. Right here is where the account is receiving. And under here is where the account, let's see, from straight here, this is where the account, your money going or losing money. This is where your money going out of the business. So that is everything right now for that. Hopefully you guys understand that. And it's nice to be with you today. I'm the study prep guy. Stay in tune for the next live reaction like this. So see you guys in the next video. And comment what you want to see next in the next video. Comment what topics you're having issues with, and I will more than likely be able to make a video on that, right? So see you guys. See you 2025, 2026, or 2027.